Well, we'll get started here in just about 1 minute. Appreciate all of you guys taking the time to tune in. This is Morgan with the TradingPub.com, and we started these TradingPub events. Actually, it's interesting. I was actually up in Kentucky visiting Hubert, who was our second speaker, and then Mark, who's our first speaker, is actually at Hubert's office right now. But I hosted a webinar for some guys that traded the London session at, I think it's like 2 a.m. Eastern time while I was up at Hubert's. And I was just amazed at the feedback and the registrants we had. And after that, I said, it'd be kind of cool to try to do something that basically, brought a bunch of traders in over, kind of a 24-hour period. And so that was back. We did our first one in August. I think this is now our sixth or seventh one. So you guys seem to like it. So we'll keep doing it as long as you guys enjoy it. But I'd like to thank all of you for being here. We've got some excellent traders lined up that are going to share some of their strategies and thoughts on the markets and stocks, options, futures, forex, and Nadex. And again, we are a completely free community, and so you can always go to our site, check out the free education at tradingpub.com. We appreciate you guys taking the time to be here. And real quick before I turn things over to Mark, who's our first speaker, if you can, just type in where you're joining us from today. So it's always kind of fun to see where everybody's tuning in from. All right, California, South Africa, New York, Tulsa. Got a family in Tulsa, Montreal, New Jersey, Australia, Poland. All right, good deal. Well, good. It's always fun to see all the different places that are represented. So, and as the time changes, those will definitely change as some of the people on the West Coast start to wake up. So, all right. Well, Mark, we appreciate you being here. Mark's actually spoken at the Trading Pub a couple of times before, so he's an old pro as far as that goes. But his website is valuecharts.com, and again, they're really a kind of a different level of trader. They do a lot of institutional stuff as well. And so I think the things that you'll pick up from him will definitely benefit you regardless of what market you trade. So, Mark, we appreciate you being here. Appreciate Hubert as well. Hubert will be the speaker that follows Mark. So, guys, at this time, I'm going to go ahead and turn things over to Mark, and you can go ahead and take it away.
Okay, Morgan, thank you. Let me do a quick sound check here. Can everybody hear me? Just type in a Y. We've done this before, so hopefully we're good. Now, I am actually visiting Hubert up in Kentucky today, as luck would have it, and he's the second speaker here, so this is good timing. And, I started off my day actually on a bad note this morning. I found out as I'm traveling here that my daughter's hamster died, so that's always hard to handle when you're on the road. And I know it's a little pet, but sometimes those little pets are like members of the family, so I know she's having a tough day this morning. Anyways, great to be here and excited to go over the content today, talking about the art of strategic trade entry using value charts and momentum. So I can't complain about waking up too early. I see that we have people from all over the world, in California especially. I know it's about 5 o'clock your time right now. So let's go ahead and jump right in. For those of you who don't know me, I'm basically coming from the hedge fund world. I've been there for about 20 years now and have been involved with designing quantitative financial models and indicators in the markets for that period of time, and really started my trading career after my freshman year of engineering school. I left school to move up to Chicago and work on the exchange floor because I had to know longer term if the trading industry was really where I wanted to spend my career, and I loved it. It gave me goosebumps every time I walked on the floor. Worked there for about 2 years and leased a seat on the floor when I was 21 for a few months, and realized that my true passion and calling was off the floor and was relating to the development of the financial technology indicators. And at that point in time, this was back in the late 80s, this was back when, predating TradeStation, Omega Research had a product called System Writer Plus that was actually before TradeStation, and this is back when it took you 30 minutes to actually download data. So I'm dating myself a little bit, but technology has come around a lot, and we're in a great space now. I'm probably most noted for developing the value charts model, and I detailed this model in my book, Dynamic Trading Indicators, published in 2002. But for those of you who know that, that's where I'm probably most noted. Okay, now before I get started, I do want to make sure that everybody understands trading or investing does carry a high level of risk. It is not appropriate for everybody, and I want to make sure that any money you trade in the markets, you have to understand it needs to be risk capital. So do not trade with money that you cannot afford to lose. Also, in talking about any type of simulated or hypothetical results, it's important to understand that these results do have limitations, and that even despite our best efforts, the future never looks exactly like the past, and don't ever buy into advertisements that state that you're guaranteed to make a certain amount of returns in the future with respect to any type of quantitative models, because it just doesn't happen that way. I can tell you after 20 years of researching hedge fund models that in the best case scenarios, we found that 70% of achievement of past simulated results was really the best case scenario. And sometimes you go forward and the system or strategy does nothing even close to what it's done in the past. Okay, let's go ahead and dive into the subject matter this morning. Now, if value references are so important outside of the markets, why are they not just as important when trading stocks, options, futures, and forex? Now, this is really a question that plagued me in my early years of trading when I was an engineering student. I knew that if I went to buy a used car that I would reference the Kelley Blue Book. It was an objective value reference where I'd have some help in determining what the market considered to be fair value. And by the way, when we talk about value today, we're talking about objective valuation. It's what the market considers to be fair value. It's interesting how outside of the markets over the years in real estate and in used cars, that objective valuations really have been the only references that anybody's ever paid attention to. But interestingly enough, if you think about the definition of valuation in the markets over the years, it's actually been subjective valuation relating to the opinion of an analyst. And it's lost a lot of credibility. Books about this topic have not sold very well historically in the markets. We are not talking about subjective valuation. We are talking about objective valuation, what the buyers and sellers in any particular market consider to be fair value. So this is the question I posed when I first started exploring the concept of value charts. Now again, if you think about how we use value outside of the markets, in real estate, we think about the appraisal process comparing similar properties to the one we're purchasing and looking at what buyers and sellers have sold for or paid for there. That is the primary tool or mechanism, if you will, in real estate that we have for determining the value of any property. Used cars, new car market is not a free market. Used car market is, and so the Kelley Blue Book or Edmunds here in the United States is the guide that people look for and use to determine what the fair value is for any year, make, and model of automobile. Otherwise, we'd have no way of knowing that. Obviously, most of us are not experts in that. And then, interestingly enough, when we turn to stocks, bonds, futures, and forex markets, there is no Kelley Blue Book. There is no appraisal process that can tell us if a market is priced at fair value, if you will. So this is this is a topic that I was passionate about early on and had a lot of questions about, and this is what drove me to research and develop the value charts concept. Now, we don't necessarily care about value for the sake of value. We care about value and what it can do for us as traders. And one of the primary benefits of understanding objective value is it helps us identify strategic trade entry or strategic places or timing in getting into the market in an effort to try to experience realized profit right out of the gate. Now, strategic trade entry, how do I define that? That's going to be defined as entering each trade with the goal of achieving unrealized profits as quickly as possible after inception. So we do not want to be in a position where we buy a market and then all of a sudden find out we're underwater or we're at a loss with our trade. Ideally, we'd like to time our entry where we can achieve unrealized profits right out of the gate or as quickly as possible. So we all know that the movement or the development of price discovery in every market across every time frame involves a cyclical nature, if you will. And so what we're looking to do as the market searches out for fair value and swings overvalued and undervalued, we're looking to time our buy entries here at the troughs or undervalued price points here in the market, and we're looking to time our short entries at the peaks, if you will. And it ends up being that way ideally for the markets in the price discovery process. So learning strategic trade entry is perhaps the most powerful skill in trading. Now, there's been an ongoing debate about what is more important, the entry or the exit, and I'm firmly in the camp of believing that the entry is more important. The exit is very important. We do understand that, but in my mind, if you get in on the wrong side of value, if you buy a market that's overvalued and all of a sudden it comes back against you, then you're underwater in your trade and you're playing defense right out of the gate. So if you're able to time your entry and catch the wave, catch the market just right, and even work at doing this across several time frames, you really put yourself in the most advantageous position and have several very attractive options, including taking partial profits closer or near term and possibly letting part of your trade ride for a longer term trade with very little to no risk. So that's what we're after here. So I'm a firm believer in having strategic or targeting strategic entries with the goal of trying to, again, experience unrealized profits and put myself in the driver's seat where I have a lot of very attractive options as a trader close to trade inception. Now, once you're in the money with the trade, you are in the driver's seat. So if you do time the trade correctly, if we do time the trade correctly and are able to utilize value and momentum and price to do this, then we really have a lot of very attractive possibilities right out of the gate. Now, how do you enter a market strategically? There's a lot of tools out there that you can use. Here are the ones that I've developed or I've used historically, and these are the best ones I've found in my career as a hedge fund manager to enter the market with high precision accuracy. And again, when we talk about this, it doesn't work every time. It's something that we're looking for increasing the probabilities, having a situation where more often than not, this ends up being a very powerful way to enter, but there are times where I'll enter a trade using these tools and I'll be wrong, and obviously I use a stop loss in those cases. So it's not a guarantee that this works every time, but it's a matter of using this and using these tools together to try to get the typical or the average entry at a point where it's strategic and we have a very advantageous position going forward. These are the attributes, if you will, or the components of technical analysis that I believe need to be considered when we talk about strategic trade entry. Now, the first one is cost. Cost is communicated through the traditional price chart. So when you look at your open, high, low, close chart, when you look at your candlestick charts or your line charts, that is communicating the cost of a market, and that's stated on an absolute basis. So a stock could cost $100 per share at any given point in time, and we can see the cost history as well. So that's the most widely used market analysis tool in the world, the traditional price chart, and we use price and cost interchangeably. Okay, so I'm gonna define cost slightly different because price can be stated in terms of value on a relative basis as well. But cost, again, is our traditional price chart we're all familiar with. The next component of technical analysis here is momentum. Momentum has been around for a while. That's the velocity of price. We have a number of indicators and tools that we can use to read into or to understand momentum for a market and time frame combination. I use a tool called MQ Momentum, but there's a lot of them on the markets. Most trading platforms have standard momentum indicators that you can draw from. The last one, and possibly the most important one, is value. And this is, again, objective market valuation. Now, I have a lot of people come to me and say, okay, there's RSI, there's stochastics, there's Bollinger Bands, and these tools are designed more or less to find what we'll call overbought and oversold points in time, and they can be quite useful. And in fact, I find some of these tools can be very complementary as well to value charts. But value charts were designed to do something way beyond what these overbought and oversold tools do. Value charts are describing the valuation for any market and time frame combination across the entire spectrum, and it also addresses the degrees of a market's overvaluation or undervaluation using a complementary tool we call price action profile. Now, just to review here, traditional price charts, again, are communicating the cost of a market. We use this to identify support and resistance levels. We use this to understand the direction of the trend, and we use this for those types of things. So short-term, long-term trends, geometric chart patterns, support and resistance breakouts, those are very important attributes of a market and technical analysis, and it's something we definitely want to be aware of. So that's is why I use price charts primarily. Now, momentum indicators display momentum, obviously, and that's the velocity of price. And what we're looking for here with the momentum indicator is either slowing momentum on the downside to potentially look for initiating a long position, or slowing momentum to the upside to potentially look for initiating a short position. Now, I combine momentum features or momentum indicator readings with, last but not least, the value charts, which display objective value. So what is value? Value is a psychological component of any market. It's what buyers and sellers consider to be normal or a fair price, or consider to be above a fair price, which we'll call overvalued, or below a fair price, which we'll call undervalued. So, and by the way, I have somebody asking a lot of questions here. I'll get to those questions here in a bit. Obviously, if you need help at all with value charts, you can contact our customer service, and we'd be more than happy to help you with any questions that go beyond what I'm covering today. Now, introducing value charts, we can talk here about what those involve and what they're doing. So AL, just contact us. I can assure you, our customer support person was sick a day this week, and we had another guy out of the office. We are there today. We're there to help you. So please email us. I can assure you we'll be there to help you today. So value charts are designed to communicate objective valuation for any market and time frame combination. So if you think about valuation, it's important to understand that value is time dependent, which means that you can have a market that's short-term overvalued and long-term undervalued. So it's a little bit of a mind bender to understand that, but that makes valuation a little bit more challenging to understand, but it makes it a lot more powerful. Now, when you think about this, think about the real estate market, which had a huge bubble, as we know, in around the 2005 timeframe. That was overvalued across all time frames at that point in time when it formed the bubble. Now, since then, we've had a nice correction in many markets like California and Florida here in the United States. Now, if you take a step back, the shorter-term real estate players who are looking at years, maybe 2 to 5 years, would tell you that the market has come back down and undervalued, or fair value, possibly even undervalued. But the longer-term real estate investors who are looking at 50-year cycles might still tell you some areas of the United States are overvalued. So it's important to understand that valuation is defined by your time horizon of investing, and that they can be different for different time frames and markets. Okay, objective value keys. Value is time dependent. Again, we just went over that. It's important to understand that, and we can use this to our advantage, and we do want to use these things to complement each other. So ideally, if I can find a situation where a market is undervalued on the weekly charts and undervalued in the dailies and undervalued in the 60-minute charts, then quite often those can be used in tandem to make or generate even a more powerful entry signal. Value is best described by active market participants, and this is why I pay little to no attention to subjective valuation, because that's only as good as the analyst who gives that opinion. So a subjective evaluation is merely an opinion, and 9 times out of 10, it seems like it's an opinion of somebody who doesn't even participate in the market. So we're not interested in that. We are interested in the opinion of active market participants, and this opinion is expressed through transactional priced activity. That's what we're studying. That's what we want to use to determine and define value charts and define fair value, overvalued, and undervalued price activity. So this is value, best described as a price continuum, again, is something that's important to understand. Now think about a lot of the value references that we've had historically will say that they'll state a single price level as fair value. I believe that fair value is actually better described as a price range. Now when you think about that, it's really a range of prices where buyers and sellers consider a market to be fairly priced. It's usually not a single price level. It can be a price level within that range, but I believe that a better description of fair value is actually where the majority of market participants agree that price is fairly priced, if you will. So we use that, and we define that in value charts as the plus or minus 1 standard deviation price range where approximately 68% of trading activity takes place. Now, fair value is best described as a price range, again, as I stated just now, and then value is defined as time at price. Now, what do I mean by that? Or even fair value. So if you have a market that starts to take off to the upside and is overvalued short term, and then let's say it starts to trade sideways after that, well, it may be overvalued at this point number one right here. It becomes less overvalued at point number two right here, and then finally at point number three, it could achieve fair value. Now, the price has been the same. So in absolute terms, the cost is flatlining, but the value, that's a different animal. A value is a psychological opinion, if you will, of buyers and sellers as to whether a market is fairly priced, over fair priced, or under fair priced. So again, understand that if a market shoots up, it's overvalued. The longer it stays at that price level, the more market acceptance, the more price acceptance comes about, and that essentially eventually transitions into fair value. Now, value can be measured. This is really important to understand. It can also be measured. So if you take a look at a market, understand that this is very, very good news for all of us, because the fact that we can actually use an analytical tool to analyze the activity, transactional activity of buyers and sellers in a market, and then create a definition of fair value, definition of overvalued and undervalued points, then that is something that we can use as traders to help us identify strategic trading opportunities. So that's very, very good news for us as traders, and that is something that we want to use to obviously identify these strategic entries and exits. Now, as we look at the traditional price chart here, this is going to be, for those of you who are new to value charts, this is where you would typically position your value charts price window. Now, on top here, we all recognize this as an open, high, low, closed chart, the most widely used market analysis tool in the world. If you can picture in your mind a floating axis here that follows price along, lags a little bit, this could be used as a very primitive definition of fair value. Okay, now keep in mind that when we look at how a traditional price chart is plotted here, $60 a share is respect to zero. $55 a share, that's over zero. So this is an absolute measure. For cost, it's important to understand that when we talk about value, we're talking about a relative price measure. Okay, so this is important to understand. Now, this line that I'm plotting here on this chart, this red line, if I take this and straighten it out, I pull it straight across and make it linear, that red line ends up being my zero axis here for the value charts price window. I'm not drawing it very straight, but you get the point here. That serves as the zero axis down here. Okay. Now, what we're interested in understanding is not so much that zero axis, but we want to understand the deviations away from that, because that becomes important for us to understand overvalued and define overvalued and undervalued. So the value charts is a linear representation of the swings of a market over and under what we'll call a primitive definition of market valuation, a moving average of sorts, if you will, serving as our floating value axis, or the zero line in your value charts price window. Now, the value charts indicator itself, you'll note, has 5 primary valuation zones. The middle zone here is what we call fair value. That's green, and that comprises about 68% of historical transactional price activity. Above that, you'll notice this zone, I'll label as number 1 here, that's the yellow zone. That's plus 1 to plus 2 standard deviations above fair value, and that is representing approximately 14% or so of historical transactional price activity, and anything including the yellow and the red over fair value is about 16% of historical price activity. We can measure that and we can use this information. Now at the very top here, I'm using red on red here, so it makes it a little harder to see, but this is my significantly overvalued zone, and that's plus 2 standard deviations and beyond. Same convention applies to the downside here. The lower yellow zone, which I'll label 3 here, that's moderately undervalued. The bottom red zone is significantly undervalued. So we've colored it, made it very easy to see. There's no guessing. A price has to be in one of these 5 valuation zones, and we've color coded these to make it very easy as traders to understand and to identify in real time. again, when we constructed value charts, this is scientific. We use a lot of science in doing this, and statistics most notably. If you're not interested in statistics or have any difficulty understanding the terms like standard deviation and so on, you don't need to. It's just kind of science behind the product. Obviously, we all use products every day that we have very little understanding of the science behind, like the fuel air ratio in our cars, and maybe the elements that go into medicine. But this is the science behind the product, this bell curve right here. You don't need to know it. You don't need to understand it. What you do need to understand, there's 5 primary valuation zones here that are labeled, and that we do use science. We use statistics to define these zones. Okay, so that's important to understand. And also important to understand is that value is measured on a relative basis. So again, 3 different colors, 5 different valuation zones, and this is updated in real time, and we can use this as traders to identify exits. Now, one thing I'll point out that's very important to understand, the units for a value charts price window are dynamic in nature. That means they're constantly changing. They're expanding with increasing volatility and contracting with decreasing market volatility. There's no other way to create a value charts other than to have what we'll call dynamic volatility units. And so when you look at a chart like we did a couple slides ago of a stock, those are traded in fixed units. The value charts price window below, those units are not fixed. They're always expanding and contracting depending on the volatility of the market. So it's important to understand that. Now, this tool over to the right, we're not going to really go through in detail here, but understand there is a complementary tool that goes right along with value charts called Price Action Profile. And the idea behind this tool is to actually measure the degree that a market is overvalued or undervalued. So in this particular case, we can look at the fact that this market right now is trading currently in fair value. It's at the 3.3 dynamic trading units or value charts level. And we can calculate the frequency historically that is traded above or below this level. So you'll notice in the price action profile, you see this this percentage box right here, 27.7%. We know historically by our calculations that the market has tended to trade only 27.7% above this level, and then below it 72.3% of the time. So this can be extremely helpful, especially as you start becoming more overvalued or undervalued. Now, to the right over here on the price action profile, you'll also notice that this market trades above 8, and that means that it's within this significantly overvalued zone. It trades 1.6% of the time in that zone, which means that it's fairly overbought, which we'll call overbought, or fairly overvalued. That's we call significantly overvalued. As a buyer, we tend to not want to ever buy in significantly overvalued, and we can now define this as traders in real time. So this is a very powerful tool, not only show us where we can enter markets strategically, but it can also show us that where we can also avoid entering the markets, because when you buy at overvalued states, you're putting the odds against you. Typically, markets will come back down, they'll trade sideways, but most often they'll correct at some point. Now, it doesn't have to. Understand that just because a market's significantly overvalued, that is not a sell signal, but it is communicating that the probabilities favor the market coming down substantially or correcting down to fair value at some point in the very near future. But understand, sometimes, like after a report, after a major news announcement, the value is migrating. So if there's a major value migration in a market, then the definition of fair value is going to be in flux or transition. When that happens, then it could end up being pegged up in an overvalued state fairly, for an extended period of time. So understand that markets can either be in migration or they can be in reversion. And what we typically expect to happen is the reversion, where a market will shoot up into significantly overvalued and then typically come back down into fair value. So again, avoid buying as buyers overvalued, especially significantly overvalued, and then as sellers, we may use this in conjunction with momentum to identify a strategic entry point. Okay, so I've got a question here. So significantly under or overvalued is 1 or 2 standard deviations, and fair value is, okay, so fair value, I think in terms of the moving average, that's just our reference level. We use a simple moving average for that calculation. The deviation from that, okay, is what we're really focusing on. So as we define significantly overvalued, recall from the previous slide, that's including 2 standard deviations above our fair value floating axis. Okay, the red line that I drew on the previous slide. So understand that. So that is, in terms of the duration of the moving average value axis line, we use a 5-day moving average typically to analyze that. But that can be modified over time as well with the, depending on your focus, your time focus. So value it can be, again, a little more of a mind bender to understand how it's defined, but this whole model is designed to help us understand for a particular time focus what a market's doing. And we'll get more into this, and you'll see how this involves us including momentum and price to identify strategic entries. But if you don't understand this, we do have resources out there. We have a YouTube page with value charts. Watch some of our videos, and you'll see our traders every day demonstrating different ways to apply this technology. Okay, do you have to scan to find stocks? Yeah, David, you can use this to scan to find overvalued and undervalued stocks. It can be very powerful in that way, especially in the same sector, which is interesting. You can find, if you're looking for a stock in the biomed sector, you want to find the most undervalued one, then this can be very powerful to actually quantify that and define that. Now, again, I'm not going to go over price action profile today in detail because we don't have time, but I did want to make you aware that we do have a complementary tool to value charts that is designed to communicate the degree or the historical degree that value charts has traded above or below a certain value charts price level, and this is being applied to a market and time frame combination. Now, if you're confused by this, or you're saying, okay, wait a second, Mark, you're throwing a lot of things at me here, I'm having trouble keeping up with you. You don't worry about that. Just remember the 5 primary valuation zones, and remember the 3 colors here. That's all you have to remember, and then we'll use that, and I'll show you how that is applied to finding strategic entry points in trading. Now, I included this slide and the next one in the presentation to help you understand how the dynamic volatility units and value charts work. Now, recall the first value charts price window that I showed you a second ago, that was totally linear, so it was not adapting and changing. And what I did was I actually created a formula here that would state the dynamic volatility units in the same price up here. This is index units for the S&P. And the reason why I did this is not a value chart down here. This is just simply showing you the adaptive nature of the dynamic trading or dynamic volatility units. And this is the only way that you can consistently define overvalued or undervalued, by changing those units, by expanding those units with increased volatility, like right here. You can see how these really increased as we saw dramatically increasing volatility in the market itself. And then during periods that are a lot slower right here, even though it's trending up a little bit, volatility's gone way down. You can see a major contraction here. That's the only way we can define relative overvalued or undervalued levels, if we have some sort of dynamic unit, if you will, to do that. All right, so it's important to understand that. Let me show you one more example here of a copper bull market on a daily basis. Again, the need for the value charts to adapt to increasing volatility. Over on the right-hand side, the market becomes extremely volatile at the top of this rally, whereas early on, volatility was very low. And you can see the dynamic volatility units were contracting over here on the left-hand side. And then over here, once it got really volatile, that these units really started to expand to volatility. What is the website for value charts? It's valuecharts.com. So that's where this is discussed. Now, this tool right here is one we actually created for Bloomberg, and this is what we'll call our master value charts window. Now, this is, you don't necessarily have to have all these tools. We're not going to go over the right-hand side again here with the price action profile, but let me just show you one way that we use this tool, or these tools together with price. The first one, obviously, this upper left-hand pane is traditional price chart, open, high, low, close bars. This can be for any time frame, by the way. Directly below that, we see our value charts price window. It shares the same time axis, again, as a traditional price chart. Over to the right, the price action profile, communicating the degree that a market is overvalued or undervalued. And then we have what we call a status bar down here at the bottom, and that's just simply making it very obvious that this market is currently trading in fair value. If it was overvalued, it would show that. But this is just one way to display these tools on a trading screen. Today, again, you don't need to have the price action profile conceptually to do the things we're talking about today, but I'll show you what we can do with value charts and with momentum here in a second. Now, I've had people ask this question, and this is a very logical question. Okay, Mark, you present value charts as a model for describing objective market valuation for a market and time frame combination. How in the world do I know it works? What we did as a company is we actually reached out to several PhDs from top universities and asked them to go ahead and evaluate the algorithm behind value charts. And this is a comment from one of them, and this is Dr. Eric Laber from the University of Michigan, and he basically said that value charts demonstrates a remarkable ability, and I'm reading this box right here, value charts demonstrates a remarkable ability to define market valuation through dramatically different volatility conditions contained in 30 years of S&P 500 market data. So this was designed to be a validation of the product. And what we found, we chose this as a great starting point. We've done many more markets or evaluated many more markets outside of this, but we like the S&P 500 across 3 decades because volatility increased by 450%. So we needed to know that our algorithm was effective in adapting to changing market volatility. One of the studies he used is called box plots, and this is shown right here. You can see the boxes are dramatically greater here, signifying increased volatility in the S&P 500 compared to these earlier ones. And then you can see a much greater consistency here in terms of the volatility of the value charts. And this is the dynamic volatility units adapting to that. So that was a very positive return there, validating value charts. Another study that they did, again, if you can totally ignore this if you're just interested in the application of this, but for those of you who had more questions on the theory or the validity of it, this is just a question to address that. The QQ diagram plots comparing the 3 different decades, it was important that we realized a 45-degree line when we compare these right here, and all 3 examples show that we actually did get that. So they came back again, said the QQ plots clearly show price action profile from the 3 different decades in the S&P 500 to be remarkably similar, which indicates that value charts were highly effective in defining market valuation despite dramatically changing volatility conditions. So this is a validation, and we not only had Dr. Laber and Dr. UCLA, we also had a 3rd PhD from Ivy League, University of Pennsylvania. So, and he validated the results and the work of Dr. Eric Laber and Sheila Nair. So that was our attempt as a company to have the academic PhD community critique it, and it came back with very positive remarks. Now, it's important to understand, as I say these things, just because a market is overvalued, it does not mean you want to sell it. Because remember, a market value reversion. Very important to understand. The value charts in and of itself are not a trading strategy. They are designed to communicate the state of objective market valuation for a market and time frame combination. All right, so hopefully everybody understands that concept. Let's go ahead and dive in here to a couple of trading examples recently. Now, the stock market had a recent top. It's gained some strength since then, but let me show you how we use these tools in real time to identify 2 of these peaks right here you'll see in the stock market. Okay. Now, one of them, this first peak was on, I believe, the 7th of March. The other one was the 21st of March, if memory serves correctly. But this is what I want you to understand, is not only did we identify these peaks right here, okay, down to the day, we identified these peaks right here almost down to the hour. All right, so we broadcasted this to our members. I'm going to show you the trade alert that I broadcasted for each of these 2 peaks right here. Now, is this because I'm smart? Absolutely not. It's not because I'm smart. It's because I had the right tools, and I had tools that were screaming that these could be topping points in both the S&P 500, NASDAQ, and the other markets as well. So this highlights the importance of having a complete picture when you're using technical analysis to evaluate a market. Okay, so let me go ahead and show you again. This is a S&P 500 zoomed in. So for the top there on the 7th, the top there on the 21st, we broadcasted those trade alerts almost, it was down to the hour for this first top, and then it was very close to the hour here on the second top as well. And the only reason why we're able to do that is because we have a complete picture using price, momentum, and value of what a market's doing. Here's the first trade alert I sent out. I said stocks look like a potential short-term or long-term top here. This was right at the point when the market in the morning was responding from news, shot up into significantly overvalued on the S&P 500. It broke the channel, but it was also significantly overvalued, and we also saw a divergence here with momentum. So weakening the momentum indicator right here is lower than what it was over here. So we have higher prices here. So you'll notice our prices are trending higher here at these same points, but we have lower momentum readings, especially this last one. So combining those together, the price at new highs, the red tip here you can see in the price bar, and the significantly overvalued, which we note the market trades less than 2% of the time at that state on 120-minute price bars, and then a weakening momentum. All of those together pointed to the fact that this was a higher probability, shorter long-term top. This was published. I actually went short myself in my own account with NASDAQ and had a really nice trade there from doing that. Let me go ahead and show you a quick chart example here on the actual chart in TradeStation. Can everybody see my TradeStation okay? If you just type a T or a Y, just let me know that you can see this. Excellent. Okay, Chris, you're asking, how would you hold the position if value chart shows a position overvalued, it keeps on going? See, that's the thing about it, is that's why you want to consider momentum as well. So in other words, I think what you're asking is value migration. And you'll notice down here when it really started selling off, this is a value charts indicator on TradeStation. Notice down here at the bottom that, let's see here. Let me go ahead. I'm going to go ahead and increase my value charts width here. This will take me 2 seconds. I want to make sure everybody can see this. This is a little bit of a longer way of doing this, but unfortunately, when we build these indicators for different trading platforms, the only way we can do it is how they allow us to do it. So in order to increase my bar width here, I'm using, Hubert's been kind enough to lend me his computer this morning so you all can see this. I'm going to just quickly do this, and I'm just about done here. Okay. So down here in the bottom, you'll notice the value charts price window, and you'll notice that, in fact, let me go ahead and change my input. I usually like to use a 5-bar analysis period when I'm looking at 240-minute charts. So you'll notice right here that of what I was looking at, and right here you'll notice that there are some instances where you're in overvalued and overvalued a bit, so there's a bit of a migration going on here. And then up at the top here, you'll notice that the prices are really poking up and overvalued right here compared to the bottom here, and then they come right back down. So right here is a great example of a significantly overvalued reversion right here as well. And there are other instances where you see the market remain and significantly overvalued for more of a period of time, and then they slow down. So it can be a little bit of a combination of both sometimes. Sometimes you see a little bit of a migration, and then it starts to slow down, and you start to look for a reversion at that point in time. So Chris, let me know if I didn't answer your question with that, and I'll show you the some of the triggers I'll look for here. But let's go back to the instance on the 7th, of this month. So let me, in fact, I'm going to pull up. See, for back to March. Let me go ahead and go back in time here. Just a second here. Make sure my scaling is allowing me to do this. So I want automatic scaling. All right. So where are we after? So we're first of all going to go after the, okay, I don't know why it's, there we go. So we're going back in time here. You'll recall from my previous slide, the S&P 500 was significantly overvalued. In fact, let me go ahead and pull up the 120 chart here on the S&P 500. Just a second here. So going back to the 7th, when I broadcasted that alert. So this is what I was looking at in that situation. In fact, I'm going to go ahead and insert an indicator as well, which we call MQ momentum at the bottom. So in addition to my value charts price window. Now, you'll notice right here, you see and on the 7th, you'll see my momentum line, especially in the NASDAQ. The reason why I sold the NASDAQ short after broadcasting an S&P commentary was the fact that NASDAQ was really the weakest sister there. So you'll notice in this price bar at the very top here, where my cursor is, that price bar was reaching new highs here briefly. It was moderately overvalued, so it didn't quite get as strong as S&P 500 in the 120-minute value charts window. But look at your momentum. Your momentum was really low here. In fact, notice here, if you look at your momentum histogram, you see how the histogram bars are actually red? So they never actually turn green here. And notice I have moderately overvalued prices up here. So my value charts price window. That can be very powerful indication that your momentum is really not agreeing. It's really pointing out the fact that there's a higher probability value reversion when that happens. So my indicator line here, you can see from the previous day around 12 noon, falling way down here the following day on the 7th of March. And you'll see we poked up into moderately overvalued after the news announcement, reached new price levels up here in our chart, and then momentum was much weaker. Those are the things we look for. Okay, like for example, I'll show you a silver trade that Thomas took yesterday in our live trading room. We actually put that on our trading accounts ourselves as well. That just absolutely nailed the bottom using something similar. He was using a trend line, undervalued divergence as well. So this, let me see if I can view the drawing toolbar here. Let's see here. Okay, view. I don't want to mess. Okay, shows drawing. Let's see. Oh, there we go, top. So right here, if you can see the trade arrow, that red arrow, that's where I sold short in my account. That's where we broadcasted the short signal. So does everybody see that? Let me point down here at the bottom in the momentum. Now, I'm not here to tell everybody that you always make money doing this, because you don't. We have losing trades just like everybody else. But when you have a situation like this, what I do is when I'm overvalued, or especially significantly overvalued in that point in time, the great thing about that is that I don't have to give it a very long leash, because it either is going to be a value reversion, especially if you have weaker momentum, or you're going to be wrong. It could be a migration. So I'm not looking to put, I'm looking to put on a fairly tight stop when I see that happen. All right. And so after that, the market didn't go down. I mean, it went down right away, but then you'll notice the following days it kind of just chopped around a little bit. Never did reach the highs that we were at. And then eventually, over the upcoming weeks and days, it really started to fall off sharply. You can see what it did after that. I mean, it just got crushed all the way down here to the bottom. And so that right there, think about how strategic that entry was. That's the type of thing we're looking to go after as a trader. Now, not only did we identify this, but let me show you what else we did. See this secondary entry right there? So this was on the 21st. Let me see if I move that arrow. That was a secondary entry we recommended as well. And you'll notice right here that the market was significantly overvalued on the 120-minute basis. Let me show you what we were thinking and why we identified that as well. So again, we're looking for the weakening momentum. We're looking for new highs and a bearish divergence here and overvalued bars here, all these things together. And then there were some weekly price charts that we looked at as well to determine a bearish outlook, which we broadcasted to our members here over the past couple of weeks to the stock market. So that was good back then. We're evaluating it now. I think we're actually still short, or we're looking to go short today as well, but I'm not trading right now. So what were your stops and price targets? Excellent question. For me on this, what I did was I didn't catch the exact high. My short entry in the NASDAQ was literally like, let's see here. It was literally probably about 3 or 4 points off the high here. So when it sold off, it was 3 points under the high. S&P was coming out as significantly overvalued. Obviously, the indices are all very highly correlated to each other. I was looking at putting my stop right above the current high. So I didn't put I risked, I think, about 3 or 4 points on that. In terms of the profit target for this trade, we were actually looking at a longer-term time frame. So we were looking more of a weekly, sell-off. And frankly, this happened a heck of a lot slower than I thought it would. I thought it'd roll over fast, but it finally did, rolled over and sold off, 200 points down to the lows we saw in the last couple of days, and then we've bounced back since then. So our target was a longer-term target, but we eventually got out of that and took our money and profits and ran, and then we're able to take advantage of that. So let me show you this other example here. I'm going to throw up the let me get back to our presentation on the PowerPoint. I'll show you the next trade alert that we published there. Okay, again, I'm showing you the trade alerts not to show you that I'm smart or have some special insight. We do have special insight, I think, when we have the combination of value, price, and momentum, but I'm not here to tell you I'm always right, but I am here to tell you that we nailed those 2 highs down to the hours, and that we were able to do that because we had the complete picture of a market, what it was doing. We had value bars. The value bars tool right here, by the way, is something that's complementary value charts. It has the same color scheme, communicates the same valuation information, essentially, but the value charts price window itself has a momentum component as well in there. So this one right here, now one thing that's really interesting is this is not a candlestick chart, but we also have the ability to apply the value charts concept to candle charting. So candlestick charts are basically a situation where, obviously we're familiar with the different candlestick patterns, but the way you combine this with value charts is it's a cross above or below certain valuation zones, like moderately overvalued here, that they can be very bearish. So a doji in candlestick charting is neutral, and you notice the doji is combined or defined as the open and the close being very close to each other. But taking the doji and then having it poke up into moderately overvalued and selling back off into fair value, that's called a yellow hat doji, and this is something that's bearish. So we sold this, and we had some of our traders following us as well take advantage of this as well, and this worked out really well. So the trade alert was 60-minute yellow hat doji and S&P 500 sell setup, and this was something that we went short ourselves on. Let me go back to the chart example here and show you an S&P 500. Okay, I was using 60-minute, so I'll show you what that looked like. Again, that was on the 21st. Okay, let's see here if I can find that. Okay, since in here, spread this out a little bit. Okay, so this is really what we're looking at here, right here on the S. And let me draw some. See right here? That is where we broadcasted the trade alert right down here for a sell setup, and it worked out really well because the market really started to sell off. So the value candles, again, using the value charts and candlesticks together are very powerful. And value charts below, we have my candlestick patterns above here. And then the other thing is you'll notice a slight discrepancy in a weakening momentum pattern on the histogram of the MQ momentum, and that actually all price, momentum, and value together to describe what a market's doing. Now, let me throw up something interesting that's happening right now in silver and gold. So silver and gold, we were buyers last couple of days in. Let me show you why, and why silver and gold could be heading up here near term. So we've been buying it again over the last couple of days. Let me throw up the weekly chart here and show you what we're thinking is happening here. Now, what's interesting here is you'll notice the weeklies here on we have a higher highs, if you will, compared to the previous. I mean, obviously we haven't broken the old highs back in call it September of last year, but we have had a nice rally here in gold. We've had this correction of about $100, $100+ an ounce, and then you'll notice that we've come back down to moderately undervalued here. Now, this is a great setup because you'll notice that our momentum picture is dramatically the low back at the year end of gold. We were actually bullish back then as well. And then look at the higher low here. There's a much higher low in the momentum picture. Undervalued, this is when we started buying ourselves in their own account, and then broadcasting buy signals as well. And this is what gold has done. So gold has rallied up. We do have, expect that gold could have a nice run here, higher even than what it is right now. But again, don't go out and blindly buy gold on a weekly basis. You want to time your entry charts. Let me throw up silver there as well. Silver is really interesting as well for those of you who are looking for maybe a longer term trading opportunity. And if you trade stocks, you can look at the ETFs for this as well. But we're focusing on futures. The one thing I'll tell you is that notice here we've got a really great trend line going down for silver. Okay, so very, very nice there. So this is something that we think it's going to go up and test, which takes silver prices probably up $1 an ounce or so in the upcoming weeks. But if it breaks this trend line, silver could easily pop back up to the 25 level. So be watching for that as well. Let me go to a shorter term intraday picture. We had silver come down to a trend line yesterday, and we actually bought it. Let me see. In fact, I think we're off the dailies here to show a better picture. So there was a trend line in silver that was literally connecting, some of the lows here to where we were. You see how that just carries over? It's with the way this is scaled. See. All right. Let's see. Let me see if I can zoom in a bit. Okay. So the trend line here is part of it, and that's why you want to have obviously the price chart component, okay, displayed. Now look what happened yesterday. This is on the daily basis. Silver came right down to this trend line. So hopefully everybody sees that right here. That's important to understand because support and resistance levels are something we want to take advantage of. Now look at your daily. This is where the really great part of the signal came in. You see the very yellow tip of my price bar here on the value charts indicator? And then at the very bottom, do you see that the momentum histogram is green. It couldn't even turn over to red. This would suggest that we're looking at a value reversion here. So we actually bought literally within, I think, like 2 to 3 points of the low here, and have made some really nice money since yesterday on long silver. And we did that because it was on that trend line. We had a undervalued daily. We call this a no return setup. And then we also had a positive histogram momentum picture in the MQ momentum histogram. So those combined together were very strategic. Let me drill down here and let's take a look at the 60-minute price bar. So right here, again, this is where this happened. And you'll notice that there's nothing really from a momentum standpoint on the 60 minutes telling us to buy down here. We were using more daily logic right there. We have the trend line, but notice that your 60 minutes, and let me even put up 120 there, are significantly undervalued. So this market shot down here. We know that this market trades in significantly undervalued, less than 2.5% of the time. We know there's a trend line right underneath there. We know that it has a great daily setup called the no return. So combining those things together allowed us to take advantage right here of a very strategic entry there. Now we're in the driver's seat. Now it's run up here. It's correcting down against us a little bit, but with that entry level right here, I mean, we're doing great. So this is something that we're going to leave on for a longer term play, and we're going to hope that silver goes back up here over the next couple of weeks to retest that weekly trend line I just told you about, and then if it breaks that, it could really take off. So this is an example, again, of us entering the market within several points of the low. We were literally had an unrealized profit right out of the gate. I think the trade was hardly ever underwater, if at all. And then we've enjoyed a situation where, because we were so strategic with the trade entry there, that we're now in the driver's seat. So we can kick back and just see the market. You know, it's either, obviously, there's an ebb and a flow. We're going to have a rally and just going to give back a little bit of profits as this market goes up and down. But we're okay being stopped out here at break even, because if we hold on to this more right, then we're literally risking maybe a total of like $150 or $200 to make 20,000. So that's the type of thing we're looking for a lot of times as traders, catching the swing and being very strategic about our entry point there. Okay, Alfonso, okay, assuming that we are in overvalued, it's time to sell the market, but according to forex calendar, the actual result must be buy. Okay, how is that then? Well, if you have, what I would recommend doing is developing an outlook for a market that gives you a bias. And then once you have your bias, for example, we have an outlook for silver. Let me go back to the weekly chart here. That's bullish. Okay, so because we're on the trend line, the downside right there, and also you have a much higher momentum picture here on your weekly. So notice my low and momentum down here. I'm seeing higher lows here in my momentum picture. Excuse me, let me get a trade over here, right here. So notice this first point right here. Everybody agree that my momentum indicator is much higher, the blue line, than it was over here. And we're right up against the trend line. So this is a great setup. And again, we're looking for silver, the downtrend line, and potentially break that. But that's what we're looking to do. So our outlook was defined from the weeklies right here. And so we weren't looking to sell. We were looking to be buyers there. And then what we did is we drilled down, found the great setup again on the dailies, and then used that to take advantage of a very low risk entry right here. Okay, let's see here. Okay, where are your stops and price targets? David, the way we trade is that we wait for momentum to tell us when to get out. So now a lot of people have price targets. Nothing wrong with doing that. In fact, it can be an extremely powerful way to trade with value charts. If you have your stop and price target, obviously you want to typically have your price target 2x or 3x or 5x your stop. But in terms of stops, what I tend to advise people is look for near-term support and resistance. So in this case for silver, very easy. We had the trend line. We put our sell stop below the trend line, risking literally $150, $200 there. And then our buy target, again, for us, because our long-term outlook involves this down trend line, so we're forecasting silver to potentially go up, to call it right around the, let's see here, maybe around the 21.30-ish area, so $21.30 an ounce-ish area. So quite a bit of upside potential here near term. And then if it breaks that, which we believe if it goes up and tests that, there's a high probability it's going to break it, then we think it'll go up to $25 an ounce. And then you can see where this all started. So we've been watching silver for a while. We've had some, and truth be told, when we do this, it's more of a campaign for us. So we'll buy it. If we're wrong, then we're out with with a small loss. We'll buy it. If we're wrong, then we're out with a small loss. So we can find, especially on a weekly basis, if we're looking to buy a market, we can find several entries, and then sometimes the swing doesn't happen, the move doesn't happen with our timing, but we keep on putting our bait in the water, and then finally, if it catches, our winner will hopefully be many times what our losses, if any, were. So that's our theory behind how to do that. And if you look at some of the best traders on the planet, you'll find that a lot of those guys will, especially ones going after swings and trends, they're going to test the water, so they can have stopped out, and the third or fourth trade would be the one where they really hit a nice lick, and that's what we're after there. So, Paul, you're asking about performance. What I would recommend you do, Paul, is follow our trade alerts. I mean, look at it real time. So we have a lot of people following in their own accounts, us trading in the live trading room, and I'd say the proof is in the pudding. So watch us broadcast these signals real time, and then I would definitely advise you to have a way to manage the trades. So my background, Paul, is I come from the hedge fund space, and we've had great years. We've been 1-2 star searches, and I've also had to close down a fund as well. So it's been challenging. It's been great. So it just depends on the model. We were more trend followers in the hedge fund space, but everything that I've shown you today is how we trade our own money. So that's this is what the guys will tell you in terms of how they manage their own accounts and how they call out signals every day. All right, so David, let me answer your question in just 2 seconds here. One thing I want to point out here is that we've had a lot of people ask us for the value charts indicator. Okay, now what we've done at our website is we've had several different bundles, and our indicator bundles range from $500 to $1,500, and so what we've done here is we said, okay, let's break out the value charts indicator, and for those of you who just want this one indicator, let's offer this for a limited time by itself. Okay, so we've broken this out of a $1,000 core bundle, which we've never done before. We had this recent promotion with this as well, but this is the first time as a company we've ever done this. If you're interested, this will be available on TradeStation, NinjaTrader, TOS, MultiCharts, and so on and so forth. Check out valuecharts.com/chart. Okay, right up here at the top, go to valuecharts.com/chart. We have this available on a number of platforms. eSignal. eSignal, by the way, is they don't allow their graphics to plot just like ours, so it's a slightly different variation of value charts. But Ninja's the same, essentially, as what you saw today. TradeStation, MultiCharts, Thinkorswim, Sierra Charts, so on and so forth. So we've got a lot of different platforms out there. Check it out. This is limited, and for those of you who have been asking for this to break this out, we're doing this. We hear you, and we've done this, and this is hopefully something you'll enjoy seeing. Okay, so go to valuecharts.com/chart again to take advantage of this offer, and then we can do that. So let's take a look at some markets again. Go to valuecharts.com/chart, and then you can take advantage of this $97 value charts offer. I'm going to go back to answer some questions about markets and what we're seeing happening right now. Okay, let me get out of here. All right, so David, I think you were asking about the major indices. Let's take a look. So is there one in particular, David, you want to look at, or I can pull up the S&P 500? Possibly. Now, here's what's interesting. Daily perspective right now, and if we close like this today, this would be a hanging man pattern, all right, on candlesticks, and this would be bearish, all right? So look at right now, just looking at my technical analysis, we're right up against previous support and resistance. So the line going back at 1868, we're very close to that. We have a potential right now. Now, a lot of trading left today, so we can't call a candlestick pattern yet. But if we had this close right now, then I'd be looking to be a seller right now. And I think we're actually, Thomas Wood in our live trading room, I think is actually looking to possibly take advantage of some sell signals there. But notice also the value chart. Now, this is interesting. This is a situation where the value charts indicator here is only making it up to fair value. Okay, but notice down at the bottom, MQ momentum is much weaker. So the previous back down here, we're potentially looking at a secondary or weaker lower high here, and then market turning down. So right now, I'd say with the picture I have right at this minute, I would say I'm leaning towards bearish on that. Now, the one thing I'd also tell you is that this is a resistance level at 1868. If we break that to the upside, and we close above that, then I'm going to reevaluate. Okay, and this is how I trade. So I'm not ever married to an opinion about a market. It's very important to understand that. My opinion is based on what the market is telling me at that minute. And so right now, again, it looks very bearish to me. Now you can look at a situation too in the stocks where if you have a market that only corrects up and creates what we'll call a green doji right here, and that's as high as it can get. It cannot even push up into overvalued. That can be translated as very bearish as well, because we had a very nice sell-off here. The market's not, the buyers are not even strong enough to push it up and overvalued. And it stops right here at the doji and then breaks the low of that with the next session, especially on the dailies. That could be construed as very bearish. Okay, and the momentum picture certainly is very, it's looking like a weakening picture here. Now we had a question. Let's see, NASDAQ. Let's throw that up there. Okay, NASDAQ has been the weakest sister of all of them. Yeah, this is beautiful. Same thing. You've got weakening momentum, nice correction here, potential. Right now it looks like a hanging man, but the upper wick is a little bit too long. But this right here, if we form a doji, a green doji here, and it closed right now, I would say that's bearish. Okay, so I'd be looking to sell. Again, we're looking at Russell. Let's look at Russell. It's going to be similar as everything else here. So on the daily, same type of thing. This is actually a much better candle pattern right now for the hanging man. But again, we have the rest of the day to trade. This could look very different later on than it does today. So that right now, and the Russell looks very bearish as well to me. Okay, let's take a look. Emmanuel, can you tell me the symbol for your stock? This is I trade futures a lot more, so I don't know the stock symbols. Okay, looks like an indicator, but unfortunately. The SA for the indicator for value charts, TOS should be a fairly accurate representation of that. So let us know. Give us a call if you want any help with that or need guidance there, and we can work with you on that. Okay, NASDAQ, Dow, Russell, we just looked at that. I'm joining. Morgan can answer whether the seminar is recorded or not. I don't know offhand. Okay, let's see here. Yeah, I think he said it is recorded. For those of you who came in late today, explanation of value charts. Yeah, Fred, that's a good question. What I'd say is check out our website, valuecharts.com, and then more specifically, if you want to see this stuff in action, we have a free daily newsletter in the form of a video every day and a YouTube channel as well. So check out the Value Charts YouTube channel. But we also have a kind of an introductory offer for people who want to kick the tires in our membership. We have 2 live trading rooms that go on every day for a couple hours, and we also have other things as well. So give us a call. We'll take care of you at valuecharts.com. Go to our homepage. Our lower left-hand corner is telephone number and our support email. And I know somebody was upset earlier because they said we didn't respond. I apologize. We did have somebody out sick, and we had actually 2 people out sick. So it's very unusual. And I'm traveling, so it's kind of a perfect storm. We usually get back to people very quickly, and we didn't. So whoever was mentioning that earlier, that's a very rare occurrence. I can promise you we're very, very on top of customer service. Okay. So check out the YouTube channel. Come and watch our live trading rooms. Our Monday night strategy sessions are great. We tell you exactly where we think markets are going, and we feel like we do a pretty good job of predicting that. Okay, do you follow Singapore and Japanese stocks as well? Yeah, we followed the Asian stocks as well. We certainly traded those when I was with the hedge fund very actively on the Singapore Futures Exchange, and then also the Japanese stocks and the Hang Seng and whatnot. So we have followed those. I don't have those up today to go over, but those are probably going to track what we're doing as well here, the Nikkei and whatnot. Our markets, if we see a sell-off in our markets, you're probably going to see continued weakness in theirs as well. Okay, let's see. If you buy the platform, Rich, you can put it on a couple of platforms, so same price, and we take care of you there. It's honor system, obviously. If you buy it for yourself, we ask that you keep it for yourself and not pass it around. It keeps our costs lower doing that. Okay, my question, integrating value charts. Oh, okay. Yeah, Emmanuel, I'm not familiar with that platform, so we don't have that currently available on that platform. So the answer right now, I'd say, is not yet. We don't have it for that, but shoot us an email at customer support, and we can take a look at it. If they have a way for us to build it out, and we have enough people asking for it, we'd take a look at it. Bonds looked strong to me earlier today. So before I jumped on the session, so let's see what's going on with bonds. All right, let me see if we can. Let me look at intraday. Bonds are interesting. We've been in this channel for a while. I actually have been selling it over actually, let's see, where was I seller? Yeah, a couple of weeks ago, I was selling the bonds, and I was really selling the Eurobond and took out some money, or some points to the downside. It had a stronger than expected correction. So right now, let's look at the weeklies first. Okay, so weekly basis right now, I'd say it favors the bulls. Okay, there is Hubert has a lot of support and resistance levels here on the bonds, and Hubert does trade the bonds more than I have lately. But so right now, I'd say you have strengthening momentum, so it favors the bulls. A daily pattern on the bonds right now, I'd say if I had to choose, it's more bullish than bearish. But we're up against resistance here, so be careful about that. And if the stock market breaks its resistance level and starts rallying, then it's going to cause weakness in bonds. Let's take a look at the 60s and 120s here. Yeah, so right now, this is a good case. So right now, if I were buying bonds, I would have just bought it. All right, I'll tell you why. Because this is a situation where, notice in your value charts price window down here, you shot into moderately undervalued, and then notice down here on your momentum indicator that your indicator line is much stronger. So this is exactly the type of thing that I like to look for. So strengthening momentum, you have a higher low right here, moderately undervalued right there. You're right on support level. Hubert has this drawn, so I assume that he's got a good reason for having it there. And then we're bouncing off of that. So support, you have moderately undervalued, and you have higher momentum. That's a really nice setup there. So right now, intraday, I'd say that I'd be on the long side of, I'd put those of you asking right below this, and that price level looks like right around 133, 12-ish maybe, or 133.11. So just right below there. Now, we're coming a little late to this because it's already bounded out of moderately undervalued, but this is the type of thing that I would look for. Hubert is up next. Yeah, so Treasury notes, let's take a look at that. I'm sure it's going to be very similar. So yeah, so you have higher momentum low. Now this is a little bit strange to me right here, because it looks like your histogram was weakening a little bit on the 60s. This is one of the reasons why I tend to favor tick charts as well sometimes, because this is, it paints a little bit of a mixed picture here in the 10-year notes. Bonds are a little bit clearer, but the point is, with everything we're talking about, is we're talking in terms of probabilities, right? So it's not a matter of a degree of certainty with the markets. It's a matter of trying to find strategic entry points to get into a market, and then if we're right, we enter at very low risk. If we're wrong, oftentimes even when I'm wrong, when I enter a market strategically, then I'm in a great situation because I can still get out of break even if I'm wrong about the longer term picture. And that's the power of strategic trade entry with value charts and momentum and price. So it's important to understand that as well. Can you add Ichimoku? Yeah, in fact, when Hubert jumps on here, we'll see if he's doing that. I'm not sure if he's covering that or not, but he will do that. So I'll let him do that when he jumps on here. Okay, Ninja Trader. Yeah, Tony, this is available on Ninja Trader as well, and it plots very nicely. Ninja Trader has really nice graphics with that. I was not able to get the big charts. Okay, instead. SA, I'm not quite sure what you're asking. Not able to get this as bar charts for each day as shown above. Instead, it shows 3 straight red, yellow, green. Give us a call, SA, if you have any questions on this, and we'll make sure you get set up properly. But yeah, I'm not sure what platform you're using or what you're looking at, so it's hard for me to comment on that. Okay, can you check out, British pound? You mind if I look at futures? Actually, yeah, I guess I can look at the forex. So just a second here. GBP USD. All right, that's been up against major support or resistance. I'm sorry. Lately, I know I looked at this not too long ago. Let me look at the monthly here. So check out. Actually, yeah. So notice the resistance line. This is what I was looking at not too long ago myself for the pound. You've got the resistance line right here, right around this level. Now we broke these previous highs a little bit. You have another resistance line right around the highs going back to 2009. So you're running into resistance right here, and that could slow it down. But what's interesting right now is it's holding strong here. If it continues to hold strong here and not even dip into moderately undervalued, momentum's holding strong. you could get a situation where this could pop. So right now, I'd say on the monthlies, at least with what I can see, it favors a potential testing here. Now, the weeklies here, we're right up against resistance. We're moderately overvalued, and notice how this is the bearish setup we talked about earlier. This is what we call the no return. So that's definitely, that would get my attention. So you could sell this and 0.06 resistance level because you've got a no return so far. Now, here's the thing to remember. The week's not over yet. So it's an incomplete bar. We don't know for sure that this is not going to be a migration, but so far with the resistance level right above us, that's a really nice situation. We don't have to risk a lot there. And with our histograms still red on the MQ momentum below, that's a good situation. So, all right, yeah. If anybody's interested, come to our website, give us a call, and we can even get you into kick the tires in a live trading room for free for a day if you want to, or to get ask about the promotional membership as well, and we can get you in there to try it out. But I mean, at the end of the day, anybody can look back on a chart and say, yeah, I would have bought here and I would have sold there. These are trades I showed you today that we've actually taken ourselves, and this is what we actually published and talked about with our members. So our goal as ValueCharts is to not only educate, and really the number one goal is to educate you, show you the tools that we feel like are the best tools to strategically enter markets, and then also to educate you in how to use them. And then we're traders as well, so we just all trade together, and hopefully everybody comes out ahead. So, okay, yeah, AL, just give us a call. Just reach out to us. Shoot me an email. Send support, AL, send support at valuecharts.com an email, and send it to me. Say, can you forward this to Mark? And I will reach out to you myself today. We'll make sure you get taken care of. So don't, yeah, and I apologize again. We had a couple people out this week. We had one person had surgery. Another person was sick. It was just a rarity, but usually we're very on top of getting back with people. Raj, are these VC? Yeah, we don't have MT4 yet, but we do have another platform coming out, Raj, called GoChart. So that's actually going to be rolled out here in the next couple of weeks, and so check that out. We may develop for MT4, so send us an email at support@valuecharts.com if you'd like to see MT4 developed, and we could actually look at doing that. So that might be a good thing to do. All right, so I know Hubert's up, and he's right behind me. So he's going to talk about some great things, and he'll put up an Ichimoku chart, I believe, for those of you interested in doing that. I'm going to let him in here, and want to thank Morgan for having me today, and you guys, Sarah as well, and Yana. Have a great day, and appreciate the opportunity to present. TradingPub is always great to get wealth of knowledge in trading. So here's Hubert, and thank Hubert, too, for letting me use his computer for the morning. Okay.